Hi guys, today I'll be talking about fair value gap in the forex market and how you can identify a fair value gap in your trading strategy. So firstly, fair value gap is a core institutional reference point in any trading strategy. It can be called a buy imbalance or a sell inefficiency. So let me show you how you can identify it on the chart. So in the chart, there are times when the buys goes up. If the buy should go up, there are weak candles on the body. There are times when these weak they're part of the chart. So you don't ignore the weak candles. Do not ignore the weak candles. They're as important as the body of the chart. The weak candles are as important as the body of the chart. So what you do is you identify the weak. Whenever this weak connects in between themselves, there's a connection between these two wicks. Whenever these two wicks, the first one and the last one, the third one, whenever there's a connection among themselves, then there is no imbalance there. There's no imbalance there. There's no fair value gap. But when there's no connection like this, there's a big space among them. That's where you detect your fair value gap. This is the fair value gap, and this helps to know when the chart has to fill it in, because the algorithm was built for there to be no space within the chart. There are times when the chart needs to fill all the spaces in the algorithm so that you will know when you go for a solid buy and you know when you go for a solid sell. So on that of the sell, the bearish fair value gap, when you look at the candlesticks, the wick is like this. It's going down on the downtrend. The wick is like this. There's a connection between them. When there's a connection between them like this, you can see clearly that the first and last wicks has a connection, because the candle is not complete without the wick. You count the wick too. As you are identifying the body of the candle, you identify the wick of the candle too. So but whenever the wicks, there's no connection between the wicks like this, then that's the fair value gap. You see the space. That space is not meant to happen, but it occurred as a result of an action. It occurred as a result of an action. That's what they call price action. There was something pushed that to happen. So whenever it happens, there is a cause for it to be filled. There's a cause for it to be filled. On this bearish trend, it goes back upward to fill in that space. And on the bullish trend, it comes downwards. It comes back downwards to fill it. So this is how it fills it on the bearish and on the bullish trend. Like I said, the price action must be filled. Is the algorithm. The system was built like that. The system was built like that. Fair value gap is one of the key components that you should be looking at in your trading strategies. So let's go identify. It's one of the key components you should be looking at in your trading strategy. And be an imbalance. Yes, it can be called an imbalance, can be called a sell inefficiency. So let's identify that on the view chart. So you see what I'm talking about. So yes, this is a view chart. Yeah. You see a fair value gap there, right there. It wasn't filled. The 2 weeks before it, the first bull and the third bull, there was no connection between the first bull and the third bull. So it had to go upwards, came down to refill it. You see how it trended. Came down, went up, came down, went up again, came down. The algorithm is just built like that, and there's some spaces these algorithms are feeling that that we are yet just to say that this is the one we saw. So fair value gap, this is it. You see that space was empty, it was open until the market went downwards again to fill it. So I'll dictate that this is another one. This is another, I'm dictating another fair value gap. This is another one here. See, the market went upward, came down to fill it. You see, it went upward, came down to fill it. For a bullish fair value gap, let me show you. This is a bearish fair value gap for the downtrend. There was a gap there, but the market came down later to fill it again. You see it? That's for a bearish fair value gap. So for a bullish fair value gap, these are the market fills it. It goes up. See, the market goes up, come down, and fill it. You see, it fills it. For a bearish, come like this and go. See, down. Yes. Oh, what have I done? Yes, that is it. So it goes down there to fill it. You see, that space, that long space is the fair value gap. That long space is the gap. You understand? That long space is the gap. So wait, hold on. Let me draw this very well. Let's see. Give me a few minutes. It's okay. Yeah. So yeah, that's it. This for the bearish. This is the bearish fair value gap and the correction. Bearish fair value gap and correction. This is it. The bullish fair value gap and correction. The bearish fair value gap and correction. You see, there was a fair value gap there. The correction came upward to fill it. You can see there's a bullish fair value gap there. The correction came downwards to fill it. You see, the bullish fair value gap, it came downwards to fill it. So let's go back to our chart. See how it works. The bullish fair value gap came downwards to fill. The bearish fair value gap went upwards to fill. So that's it. A fair value gap is a core. Let's check out the chart if that what will happen. See, you see that what played out. It went, the imbalance came down to be filled. The sell inefficiency went up to be filled. You see it? So check it out. I'm trying to minimize this. So this is it. When you take note of all these, you know that these components are really easy to find. They're just for you to study the Forex market and know when to find them out. Study them, have an inner eye about it all. In every strategy, SMC, anyone, this component, this particular component, the fair value gap, the imbalance, it can be called an imbalance, it can be called the fair value gap, is a very key strategy in the Forex market. So this is a fair value gap is a core institutional reference point in any trading strategy. Any trading strategy at all, whether SMC, ICT, LBS, zone, anyone you are doing, this fair value gap is very important. So it can be called a buy imbalance or a sell inefficiency. The market will later come back to fill in that space. The algorithm was built to work like that. The system was built to work like that. This chart was meant to fill in. The chart is a digital place where it fills in, it goes upward, goes downward. So there's no space that is meant to be left unfilled in the chart. There's no space that is meant to be left unfilled. Every candle was cause for a reaction. price action, something caused that price action to happen. So if it's an imbalance, there must be a correction. After an imbalance, there must be a correction. So that's how it works. So the algorithm was built to work like that, and in any three healthy candlesticks, when a fair value gap is created, the market will always come back to fill the gap. The filling of the gap can also be called a correction. You see, that's what I said. The filling of the gap can also be called a correction. So whenever there's a fair value gap stick, there's always a correction, either from the downside on the bearish or from the upside on the bullish. So that's typically how to date a fair value gap in the forex market. So if you like this video, if you like what I say, what I share, please follow my page, like it, and send me a DM to drop more content about trading and its strategies. Thank you.